Hi, it's Michael Farr from Farr, Miller and Washington. The Fed released its report yesterday afternoon and told us the economy is still ticking along at a strong enough pace that they're going to continue to taper their monthly purchases of bonds. So they're going to reduce their monthly spending by another $10 billion and now just spend $35 billion a month. It's an incredible figure, isn't it? $35 billion a month to purchase assets and help keep interest rates low. About $15 billion of those are going to be mortgage-backed assets, and the rest will be treasuries. Again, keeping those interest rates low. We think that the economy is probably not in danger of some huge acceleration. We think that probably this 2% pace is going to tick along for a while. The Fed says that they are concerned about investor complacency. We find that hypocritical. Investors have been well trained over the past 5 or 6 years to see that every time there's a significant market downturn, the Fed's going to step up. The Fed's going to come out with a comment. The Fed's going to come out with more QE. The Fed's going to come out with something to support asset prices, both in housing and in stocks. So we believe that investors are behaving rationally in their sense of complacency. We haven't seen a correction in the markets of 10% in over 3 years now. That's really remarkable. So, share prices seem to be doing okay. The economy seems to be doing okay. And we think that that's probably going to continue. We expect share prices to continue this climb. Are they expensive? Yes, we think stocks are getting to be expensive. But remember, in 1996, Greenspan thought they were expensive, and they almost doubled by the beginning of 2000. So even though they're expensive, they can become more expensive. We're up around 5% so far this year, earnings continuing to climb. All in all, we think that it's a good time to continue to be defensive. Make sure that the companies you own have solid balance sheets. Make sure that the cash flow is strong, that you understand the businesses, and that the business models themselves are defensible. Those are the sort of companies we try to choose and select for our portfolios at Farr, Miller in Washington. So, remember our rules: buy low, sell high. This is not low, but we're not sellers. Also, remember, have a discipline and be patient. That way, long-term investors will make money over the long term. If you need a little help, give us a call at Farr, Miller and Washington. In Washington, D.C., I'm Michael Farr.